Good morning, everybody. Welcome to the Flow Show. Don't know about you boys and girls, but it feels like everything's going at 100 miles an hour since the Fed. Very, very busy. Lots going on. How are you coping, Kay?
Hey, good morning, Ryan. Good morning, everybody. Can you close the window, please, Ryan? It's a bit windy in here. or as Powell said a few weeks back, close the fucking door.
Yeah, close the fucking door. Oh, God. It happens every year. They make us work hard just ahead of the holidays.
Yeah.
So, yeah. And 4 more banks to go, folks. 4 more banks to go. 2 today, 3 today. Is Banxico today? I've lost track of who's.
Yeah, Banxico as well.
Yeah, Banxico and then the Bank of Japan on Tuesday. So, yeah, 4 more to go. And then we can all put our feet up, hopefully. Anyway, right, lots to get through, obviously. So let's get stuck into things. We'll kick off with the data because it's not been too good in a couple of places. GDP in New Zealand coming in minus 0.3% on the quarter, minus 0.6% on the year. Big misses there for GDP in New Zealand. That's obviously hit the Kiwi this morning. Then we get unemployment from Australia, which was pretty good. The employment change 61,500 from 11,000 expected. The full-time, part-time switcheroo was pretty good as well. Full-time employment up 57,000. However, the unemployment rate rose, but that was largely in part to the participation rate rising. So although that looks a negative, it's explained away by that participation rate rising, more people coming into the market. So a bit of mixed fortunes there for the Aussie and Kiwi. As I said, no surprise to see Aussie Kiwi pushing up. Oh, look where it is, round about our magic 108 level, the old magnet. Absolute glue this thing is. Let's go into a wider chart just so you can see that. Always coming back to the 108 at some point. Doing pretty nicely on the text though. I've got this longer term trend line in, but the sort of secondary shorter term trend line, well, marking this year really, playing a little bit better on that front. But yeah, here we are, 108 once again, on pretty much on the back of that data. CPI in Sweden coming off a good chunk. Year on year, 5.8% versus 6.5% prior, was expected to drop to 6%. Some of the other measures as well falling out of bed. So a lot of countries now seeing accelerating inflation falls there. PPI Switzerland, that's coming down as well. CPI in Spain coming down a little bit as well, not as fast, still looking a little bit more sticky perhaps. But that's coming down as well. So we're in a market of falling inflation, and it's picking up speed, it seems, which is one to keep an eye on. Central banks, the SNB kept its rate unchanged, 1.75% as expected. What it did do, though, is it removed the text in the statement on possible future hikes. The SNB said they are no longer focusing on foreign currency sales. But we need to change policy if the FX rate becomes too tight. Brushing off the cuts, said the rate cut is not for discussion now as the policy stance is adequate. Quick one on the S&B, Kate.
Yep, hold and taking away the references in the press conference, he even said that they were not looking at selling Swiss franc, buying, Swiss franc right now, selling foreign currency. So I guess they do expect a little blip in the inflation again, but you know, that's perhaps their way of saying they're leaving a door open, but clearly they are done. And a bit in line with what Powell was saying yesterday, they probably start to look at the other side now. It is our, let's say, green light to sell Swiss franc, and it's about as good as we can expect from a guy like Jordan who is let's face it, an Uber hawk. If he would be at the ECB, he would actually be a fierce competition to Holtzman. But yeah, I think they're done, and it's a green light. But you know what there is. It's always Swiss franc is always a bit of this bizarre one. We also have to acknowledge and know that Swiss franc is not among the main currencies of asset management in asset management books. There's a lot of currencies ahead, like of course the dollar, the euro, sterling, yen, and perhaps Aussie and Kiwi are even bigger than the Swiss franc in asset managers' books. So we are going to need flows. But this is the as good as a pivot as we can get from the S&P, I reckon. Now,
they're not going to intervene in their currency until they decide to intervene in their currency.
yeah, and we've been looking so often at those FX reserves coming down to those levels. I think that's a signal, clear signal from Jordan that this is enough.
Yeah.
He even said something which is a bit of a line going in the other way. He said, we need to change policy if FX rates becomes too tight. So that's even if the Swiss franc becomes too strong, they will have to go the other side. That's how I read it anyway.
Yeah.
But yeah, it's a sorry.
I was going to say, yeah, they've played both sides of it all the time, so
Yeah,
it's not
the
really that
thing
much
is,
of a surprise, is it?
the thing now is the if you want to be short Swiss franc, you need to choose your currency wisely, I'd say. Okay, if ECB remains neutral to mildly hawkish, then you're probably going to see an explosion in all euro or in some of the euro pairs at least. I expect them to be very, very neutral, but the ECB could also come over a little bit more dovish, especially like Garde during the presser, I would say, because we will have to make the distinction between the press conference and the statement. But if they give the green light, Euro Swiss may be a candidate. I'm rather looking at other currencies to be short Swiss against right now because I'm feeling that the ECB may be a little bit of a risk. So that for the S&P part.
Yeah. James has just said, Jordan just spoke on Bloomberg saying that Swiss franc appreciation is not so large in real terms. So I guess we have to draw up another trade weighted index for the Swissy now to watch.
Yeah, but he's watching his own trade weighted index then, because if you look at the Swiss
his
million
own
trade
trading
weighted
book.
index, it has strengthened a lot.
Yeah. Anyway, let's leave that one for the Jordan, the old basketball player. Norges, they hiked to 4.5% and said the rate to stay at 4.5 until autumn 2024 before moving down. Bit of a missed opportunity, this one, because I didn't realise that market expectations had them keeping rates unchanged. And at the October meeting, they said rates would likely go up in December. So that one caught the market on the hop a bit, Kay.
Well, the thing is, they left the door open for December, but they also said there's a lot of incoming data between now and December, and the inflation came off. And so that's where the market went like, okay, they're probably done. And perhaps we're moving over into 2024. So a missed opportunity, yes and no. It's if you look at the price action from where it comes, it is a missed opportunity, of course.
Yeah.
And actually, I was updating it in our room when we were trading at 11, and I was saying like, well, do I really? Come on, because it's a level, and but I was still a bit positive dollars at the time, and which was about 12 hours ago, and yeah, so I didn't. I decided not to go into it because I agreed upon the fact as well that with the numbers coming out of Norway and with ours dumping, that perhaps there shouldn't be anything to be done. But then well, they took it as an advantage. And perhaps also because they see the level of the Norwegian kroner, and they say like, okay, Norwegian kroner can absorb the hike shock, and the rest will be okay. So yeah, I don't know about the missed opportunity. It's a bit of a hindsight missed opportunity, I would say.
Yeah, well, we've had a bit of heavy hindsight given everything that's going on today. Yeah, Paul's asking why did Kiwi dollar appreciate last night on the back of that poor data? Well, purely the Fed, purely the dollar side of the US dollar side of things. As I said, it's more, you can see the effect more reflected in Aussie Kiwi. When you take the US dollar out of the equation. That's what you want to tend to look at. But yeah, purely the Fed by the looks of things on that move. Paul? Right, so on to the US, and we got some PPI data out yesterday, which by and large I didn't think was going to be overly important for the Fed, but apparently it was. Powell mentioned one of the comments that officials changed their forecast after the PPI numbers came out on Wednesday. So it's very, very late that they left their deliberations, and they, some of them changed their forecasts. So they are pretty much trading data dependency as much as we are. The PPI, came down, core PPI 2% from 2.3%, more than expected. All the other measures as well coming in softer. So, it keeps that disinflationary pressure in the pipe there. Before we get right into the Fed, there was a couple of comments from OPEC and their monthly bulletin, just for you oilers. The funny line that one of the guys picked up, Mark, said in their notes that they said that speculators have played a major role in the significant downturn in crude futures prices. So apparently speculators are now bigger than OPEC in determining which way price moves go. They said this dynamic was fueled by exaggerated concerns about oil demand growth. Well, so bullish they are about oil demand growth, they say they remain cautiously optimistic about the fundamental factors affecting the oil market dynamics in 2024. So you're all bad speculators, you lot. You shouldn't be speculating against oil. Naughty, naughty, naughty. Anyway, oil's still mooching around at pretty low levels after nicking new lows. We had a bit of a bounce, as you can see there, but still got a long way to go before turning around what's happened over the last couple of weeks. Anyway, right, let's get into it. His nibs over at the FOMC. Right, they kept rates unchanged. Then the median dots showed 75 pips of rate cuts in 2024. Powell said inflation is still too high. Now, let's be in no uncertain terms, the Fed have pivoted, okay? But Powell started off, he went through phases. He started off with his sort of same old line saying inflation was still too high. Lower inflation readings over the last few months are welcome, but we will need further evidence. Said we anticipate getting to 2% inflation will take some time, and they're prepared to tighten policy further if appropriate. Also saying that policymakers don't want to take the possibility of further hikes off the table. So pretty much the same as what we heard at that Spielman College thing a week or so ago and prior FOMC. So sticking to that script, which again, the market stuck up two fingers to. Then he had the turn saying, we believe our policy rate is at or near its peak, and it's not likely we will hike further. And then on rate cuts, said that the topic of rate cuts begins to come into view and will be discussed and be discussed. So there we're getting all the dovish lines coming out now. Then he went a bit on the other side of the fence saying we think we have done enough on rates, but we are not fully confident in that view, and that above trend growth could mean ultimately that we need to hike again. So as I say, on to the other side of the fence. Then he hopped back to the dovish side and said we are aware of the risk that we could hang on too long with higher rates. And then he said, you need to reduce restriction on the economy well before inflation gets to 2%. So hinting that rate cuts could come even if they haven't yet hit their inflation target. And finally, he said, we are not talking about altering the pace of QT, which I know Kay's got a comment on because he sort of bumbled that one. So overall, we have a Fed who has finished hiking in all but name, and the cut conversation has started. So what's happened? Well, as usual, the market has gotten all thrown its toys out the pram. The Fed median says 75 basis points of cuts. The market is pricing over 150 basis points of cuts next year. So make of that what you will. Carnage ensued. US 10-year yield down through 4%. Dollar yen down through everything. And the dollar taking it on the chin pretty hard. Go on, Kate. What are your thoughts, mate?
Yeah, that's an earlier pivot than I was expecting, and it is a clear one. This has I think scared the dollar bulls and those who were expecting that he would fight back a little bit. This is really a victory for the doves. Because we were talking about, we had a whole discussion about that prior to the meeting in our chat room, in our Flowonomics room, where people can go, who are with us can come and have a look at that, and those who are not with us should to come and have a look at it. And so we were quite coming to a consensus that the bar between dovish and hawkish would be somewhere around 4.875. James came up with that number, and really after looking at the pros and contras of such a number, the consensus was relatively around there in our chat room. And the 460, and we were saying, like, as the closer it gets to 4.5%, the more dovish it will seem, and the 460 is a dovish one. Now, the QT thing, and that always comes at the end of the press conference, and until now he's been really saying, like, no, we didn't even discuss it. But yesterday he felt quite uncomfortable, actually, around when the question came up in kind of double layer question there, and he felt a bit uncomfortable about the timing compared to the prior meetings as well. So if you take the overall meeting, it's clearly a dovish pivot. They are done, and I don't know where he personally is. He won't tell us, but he sounded like he might have been closer to the ones who were at the 460, where before he was clearly, without saying it, in the more hawkish camp. So yeah, and that of course is food for bond bulls, the Bilagmans and Gunlegs of this world as well. The equity markets are just liking it, and looking at the timing on the calendar where it came up with that, is that now for the end of the year, there's going to be zero stress over liquidity, probably, because the main liquidity conditions are just loosening by the hour. Likely we are going to see, with a bit of a caveat or caution for tomorrow, because we have quadruple witching, but we are likely going to see a pretty positive close of this year, right? On most of the asset markets. So I guess the dollar remains under pressure. Again, watch out for tomorrow. Watch out for those 2-3 central banks that we still need to have as well, because if we get an equal pivot from the ECB, Bank of England, or Japan, we'll come to that. It could be a real big mess for the rest of today and tomorrow. But yeah, I mean, this is all playing in favor of very positive markets.
Yeah. Well, I've got a question for you, because my mind likes to go off piece to these things and start thinking about the why of what happened. I'm thinking perhaps that obviously this is orchestrated for maybe a particular reason, and that's to suck out the volatility from everything. We know central banks don't like volatility, so this is obviously a bit of a volatile time of year anyway, end of year, so on and so forth. So have they done this turn, this pivot now? Let all the volatility get mixed up in the year end stuff, and then when we come into the new year, the market's already set, ready to go. It's done its pricing, and then we see volatility coming down rather than get into the new year, then announce this, and then have a whole volatility blow up then.
Oh, that's some question, and it really reminded me yesterday of the inverse which Corona did last year, right? Also in December. It doesn't take away volatility, and people need to close their books for the year. I'm not sure that this is get the volatility out for the rest of this year, and then we start the 2024 on a clean sheet. If that were to be the case, then I think it's a wrongly orchestrated move. Wow, that's a question.
It's, as I say, it's off the cuff thought because
Yeah, but I'm not going to say that this will fit the bill for that. No, I wouldn't think so, unless they get another couple of data out which are better, and then they pivot again the start of next year. But that would be even increasing the volatility again. That would not be, or I mean, in a way, it could calm down some possible nerves that would have been for liquidity issue over the turn, but the yields were already coming down. Okay, the RRP was coming down pretty rapidly, and that's where he was a bit uncomfortable replying to the exact question about he said we're still some way, but he acknowledged that those reserves were coming down quite rapidly. Is that a little bit? Is that a part of the orchestration? Could be, but
I guess we'll
I don't know. It's not kind of. I mean, it would rather be a political one where politicians can call for a victory. He's saying like, look at the bond market, strong as hell. Look at the equity market, strong as hell, and the dollar is still there. Even though stuff like dollar yen has collapsed. But if you look at euro dollar, it's still in the range somewhere that we had because we did trade above 110 earlier. But well, I don't think it's a question of vol also, but it may have been a question of liquidity.
Yeah, well, we'll see one way or another what happens next year. And the ratio's asked if the market has priced 150 basis points, but the Fed is saying 75. What level would you say the dollar finds support and turns around? Well, you got to remember the market always goes more. I mean, it's been at 100 plus basis points even before the FOMC yesterday. So you always got to know. We said it, for the last few weeks and months. The market always gets overexcited. Then you've also got to look at who and what is really pricing that. Okay, you might get rates markets pricing it, but is the wider market pricing it? Well, yields are pricing it. Let's have a quick look at something like the 1 year yield. It's still above where rates are expected to go for the Fed. Median 4.6%. We're at 4.92% in 1 year yield. So we're not seeing a full pricing, like the headlines are chucking out, Horatio. So these are still your sort of indicators, like short-term yields. That's still your indicators what, the wider market, a clearer layman's pricing, if you like, and what the market is pricing for rate cuts. 10 years down below 4%. The market is seeing cuts and cuts and cuts and cuts. If we get down to 3% or more, then maybe it's starting to go too far. But in terms of what the dollar's going to do, as Kay says, you know, look at what's happening elsewhere. You know, yeah, big move in dollar yen. You know, that's got double forces flowing against it. What's happening in yields, what's happening with the Fed, and what's potentially happening with the BOJ. So this is still very volatile. But something like euro dollar, yeah, big moves. But as Kay says, we're still in ranges, and we've still got the ECB to come. So we've had a decent move, you know, and since the Fed ECB, we're just banging around, you know, in a 250, 300 pip range. So there's no fireworks going on here. So really, we're still just watching the data. Okay, so whether the Fed's right or whether the market's right with its pricing, the data will tell us. You know, if the economy starts turning, jobs starts falling, you know, inflation gets back to target, goes through target, then yeah, the market is going to keep pricing and pricing and pricing. So just know which way the wind is blowing. If you want to fade this dollar weakness, pick your levels. If you want to catch a knife in dollar yen, you need to wait. You need to wait until you get. We've had a low. Now you need to get a test of that low, get a bit of sideways action where we're not going down anymore. That's when you might get a bit of conviction to try catch a knife. But I would expect rallies to be sold pretty swiftly in the dollar at the moment. But it can all change. You know, we get a dovish ECB later, and euro dollar might be down at 107. You just don't know. So, as we said also before, just take everything as after the event. See where we are after this week, where prices have settled. See where we are after the end of the year, when the market has finished doing whatever it needs to do. And then coming into the new year, you have a better grasp of whether the dollar's going to remain weak or not. But in the meanwhile, just snipe your levels, just pick your levels, but be very careful in something like dollar yen. Right, so we've got an hour, and then the Bank of England is up.
Shall we just continue to chat the hour away? You go straight into the Bank of England.
We'll just keep going till 4 o'clock, and then we'll go home. Yeah, the next one, Bank of England. So obviously the market is now tarring the BOE with the same brush as the Fed. That's what I was going to mention as well on the Fed. Obviously, all the banks have changed their forecasts. You know, still not worth the paper they're written on. Now, you remember Goldman Sachs, okay? On Monday, they pulled forward their rate cut expectations from Q4 to Q3. Now they see a March cut for the Fed, and they see 25 pip cuts in March, May, and June, and then followed by a cut per quarter after that. So Monday, they couldn't keep their forecasts longer than Monday. JP Morgan now sees a first cut in June. This is all for the Fed versus their earlier forecast of July. They see rate being lowered by 125 basis points by the end of 2024. Barclays for the Fed, a June cut and 2 cuts in every other meeting next year, which compared to their prior forecast of 1 cut in December 2024. So that just shows you, A, the banks haven't got a fucking clue what they're talking about, because they can't keep a forecast longer than 3 days. So when you're talking about, again, pricing, central banks look at what, you know, this clickbait stuff is like versus what the actual assets are doing that show you what cuts are forecast. Anyway, back to the Bank of England. I'm still unchanged. You know, we're now seeing over 100 basis points of cuts priced for the BOE, where most people saw 1 or 2 cuts coming next year. We even had the CBI out, I think yesterday, saying they don't see cuts until 2026 for the Bank of England. But now the market's getting all cutty about the BOE. I don't think they're going to be as dovish as the Fed. I don't think they're going to be fairly dovish at all. They're going to be talking about the weakness in the economy, reflecting on those October GDP numbers. But we still have sticky wages, sticky inflation. I see no reason for them to turn pow on this. So I'm in a little bit of a short in euro sterling, same as you, Ali, because that's been my plan for the BOE. If there aren't dovish at all, then we should see the pound gaining, euro sterling dropping in that effect, and then we'll see what the ECB does. Kay, what's your thoughts for the BOE?
Yeah, I tend to agree with you. The risk, the dovish risk is the votes probably, and
Yeah.
and just the mere fact that Bailey is in charge of the Bank of England.
At least he's not speaking this time.
Sorry.
At least he's not speaking this time. There's no press conference.
Yeah, that's true. That's true. This actually could be a tailwind for the sterling today. Although, as we said yesterday, the last 3 interventions he did not put the sterling lower. So there may be a hint in there as well. Yeah, I agree. They probably will steer. Just keep the course going right now. The inflation is coming down. The issue is that Bailey got a little bit of let's say right. He was proven right when saying the situation was not good. He of course exaggerated, but we saw the data come out yesterday morning, right? They weren't good at all on the October GDP, yeah, I think the sterling could be the one that could be the one that surprises a bit to the top side later on today. I'm not going to disagree on that. I'm very neutral. Until yesterday, I thought, okay, sterling may be the one that suffers on the back of those numbers. But then, yeah, I'm gone very neutral on the sterling right now. But I don't disagree with your finding on the sterling, especially that I still don't like the euro too much, and so euro sterling could be the play of the afternoon. You know where your stop is really,
Yeah.
But ideally, you won't be done before the ECB, right? You have to get the both together to look at that level like 86, 50, 60 there, right?
Yeah.
Above there, it's probably not good news, but hopefully, let's say hopefully, it doesn't break there before the ECB. That's what I mean.
Yeah. No, I agree with that. I mean, I'm still long. My longer term longs or my longer held longs. This is a separate short. If I had 50, 60 pips out of it before the ECB, then I'll take some profit and see what the rest does. Firstly, before we move on to ECB, you're right in the vote count. We're expecting a 7-2. So 2 people voting for a hike this time, which is down from 6 to 3 last time. I think the risk is that it stays 6-3. There was enough hawks moaning about the level of wages since the last meeting. What's her name? I can't remember her name. I've forgotten it already. Who's the hawk there? No, the other one. Man, yeah, she's been the one who's been a big moaner about the high level of wages. So yeah, it would be seen less hawkish if it goes 7-2, but as the market is expecting that, maybe the price risk is bigger for remaining 6-3. So that's the first thing we always need to look at. Obviously, they're not going to do anything at rates, not going to do anything on QE, QT, all the rest of it. It's not an issue, the size of it in the UK. So the vote is what's going to count, and obviously any lines in the statement for that one. So for the ECB, this one's after Powell yesterday. It sows some seeds of doubt. I would have expected Lagarde to remain on the higher for longer path because they are more focused on inflation and what it does, probably more so than the Fed. Hate inflation in the Eurozone. But when you see that print 2.4%, that's very close to target, the closest among the big major central banks to target. So got to take that into consideration as to whether they'll remain hawkish or undovish, let's call it that. So there's 2 coins. There's the headline CPI at 2.4. There's the core still remaining sticky. It really depends on where what side of the fence she's going to land on. I would still say on the non-dovish side, but we will see. And if she still remains hawkish, then the euro is probably going to kick on for another leg up. But it depends on obviously what she then says in the presser after. So regarding my euro sterling play, if I get a bit of margin in it over the BOE, I'll probably take a good chunk off, maybe just leave a bit on for interest in case she is a bit dovish. And either way, I'll reassess. If we get down to something like 85 again, I'll reassess both the long and the short. I might knock out the long and keep the short, or I might reverse the short and add back into long. So I'll play it by ear on this one, but I can swing both ways. Kate, what are you thinking
I think,
for the owl?
Okay, it's a well. I would love to say that Lagarde is going to pivot as well, and perhaps a lady like Schnabel gave her the excuse to do so. It's clearly Holtzman remains very hawkish, and then you have what's the other one? The German one.
Casimir, Kazakhs, those
No,
ones.
the German one. The
Nagel.
Yeah, Nagel he is slowly shifting. Not has already shifted, the Dutch guy. Yeah, and that leaves a couple of the mid Europe, middle of Europe people like a bit both sides of the fence. I'd love to say that she pivots as well today, because we were looking at those PPI numbers, the difference between the US and the EU, and you look at the CPI, which overshot in the EU, so it went up higher than at one point higher than the US, and then collapsed really a lot faster than in the US. So if you look purely at inflation, even though it's sticky, but then Powell had an excuse as well on the core CPI to be a bit, which was a bit more sticky. But he pivoted and he said, like, all three measures of inflation are coming down, which is positive. So they look at the core when it suits them, and then at others when it suits them to the other side. I'd say Lagarde has the same possibility to do it, but it may only come through the presser. That is where I think that we will have to be a bit careful on the ECB today, because we could have a relatively neutral statement and then Lagarde going in her typical lawyer style, because she's a lawyer by formation, trying to lose her audience after 5 minutes, which she usually succeeds in doing pretty well, and then slide into the dovish side of things. That is kind of something that is within the possibilities, I would say.
Yeah, very much so. I think if it hadn't been for Powell pivoting yesterday, I think we'd all be thinking she's not for pivoting. But like you say, it's funny how one thing can affect your thinking for others in these situations.
Well, I thought that ECB would pivot actually before the Fed, and because of those inflation numbers coming down, because of the dynamic growth, because of the PPI as well, staying well below, exactly, there we go, staying well below. If you look at those that PPI really coming down very, very fast in the Eurozone as well. It's always like I'm not going to say she does, but it is I put it myself above 50% chance now that she pivots today.
Yeah, that's above 50%. Oh, okay, right, we'll have to come back and see how you did on that one. Right, so what are we going to do in prices then? It really is a bit of a mess at the moment. I mean, dollar yen is just, it can't hold a bid for longer than 5 minutes at the moment. So where this one is going is anyone's guess. Someone asked, I think, who was it who asked, can it bounce? Who was asking? Ali, can we reverse in dollar yen towards back higher if the Bank of Japan does not do anything? Yes, we can. Obviously, next week we can bounce back, most certainly. Where we are when we do that is another question altogether. What am I doing? Let's go into there. Where we are when we do that is another question altogether. But we're back through this 38.2 fib. Got a bit of traffic down here, 140 and a half, 140.60 up to 141. So again, another one of these former resistance areas that then broke, and then we've had a bit of messing around. And we got some bigger numbers when we get down into 138s, 139s. So, as I said, if you want to catch a knife and look for a turn, you've got to get some price action to back you up. You've got to get something like this where you get a move up and then support, or you get a move down and you get support, and the support steps up again. That's what you want to look for. So you might have to wait a bit of time just to get a bit of confidence that we've stopped going down. Once you get that, then maybe you think about a counter trade. And if it's before the Bank of Japan, where they're likely to maybe likely, whatever. I think UAID is going to push back a bit on some of his comments that apparently got misinterpreted. We know they're not going to change policy. That will be a big shock if they do anything there. So, yeah, there is a chance dollar yen bounces, but how far is it going to bounce with the market in rally sell mode in the dollar? So I'm short. I missed getting in at my better levels. I ended up chasing it yesterday after the Fed. But if I get a decent rally on the Bank of Japan, I've already been slicing. I'm going to add back into shorts. So I'll be looking for a decent bounce to get back in. And I don't care about the carry anymore. I've missed enough pips trying to get in this poxy trade for the turns of the BOJ and the Fed. So I'm getting in it now, and I'm sitting in it. So, yeah, we could get a bounce. But as I say, where we are before that bounces is what you got to be careful about. So maybe better trade is to look the other way for that one. As for the rest, yeah, we're pretty much, as said, we're holding the ranges. We're up in euro dollar, mooching around the 109, 15, 20 again. We've been here before, often, plenty of times. We're not going through yet. The market's pausing. Obviously, we've got the ECB risk, so it doesn't mean we've got a top yet. That'll be defined by what the ECB does. If she's hawkish, we're probably carrying on up to 110. If she's doing a pivot as well, as I say, we could be down to 107 pretty quickly thereafter. So be careful. It's difficult to pick a trade going in. You've really got to react, if you can, to what happens, or sit back and let the dust settle and then look for opportunities. That's all I'm really doing for today. We've got a lot of other moves. Aussie dollar, that's up. That's gone through some decent levels, holding the break for now. All that better data has given it a little bit of boost, as well as what happened in the US dollar. Really, it's an open game here. Kay, you got anything in particular you're picking out, or you just got your sniper rifle?
Yeah, I like the Aussie.
But you couldn't buy it here, though, could you?
Sorry?
You couldn't buy it here, though, could you?
No, that's the problem. I'd love to buy it back on the broken trend line, but I'm afraid we won't get it. It's a powerful pivot that Powell put in place there. So I don't know how many retracements we are going to see. Perhaps I don't know. Perhaps there's one coming this afternoon or so. Yeah, this is something, and especially if the assumption that risk markets are going to be okay into the end of the year, which is now likely the case. This Aussie may not see too many retracements. Yeah, that one is on my radar. And then in the Swiss franc, I'm rather playing it through CAD Swiss right now because the Euro Swiss, there's the ECB risk. If Lagarde remains neutral or a bit towards the hawkish side, Euro Swiss could really start to break. There are some levels there in the 95, 15, 20, 10, 20 zone, let's say. There are some really decent levels, and we stopped right on it this morning. So that's one that I'm watching for the ECB. Yeah, the yen is I have to agree with you now. I think that every rally, would it be in dollar yen or stuff like euro yen or perhaps now Swiss yen as well, are going to be sold. But we'll talk about the Bank of Japan later. In the meantime, it's really, and you know what, in the yen as well, I do think that perhaps those short gamma plays, they're still not really out of the market. So when it goes down, people just have to sell, and when it goes up, then you may see a bit bigger rebounds as well, caused by those negative gamma plays. But yeah, I think there's going to be enough rally sellers now. And what was really a bit strange today is that the Nikkei is actually lower, where the rest of the unless I'm looking at the wrong, no, the Nikkei is actually lower today, and perhaps that's has to do with the political situation. But it's a bit of a strange one, I must say, where all the rest of the equity markets are quite a bit higher. It has to be said that the Chinese markets are lower as well. But that the Nikkei is lower, I don't really see too much of a reason why. I haven't looked at it in detail, though.
Yeah. Cool. Okay. Is there anything specific you want to look at, or should we call it the shows?
No, I think we've showed a lot. Yeah, just I'm just going to say exactly. I said CAD Swiss, Euro Aussie. I like to the short side because but I'm waiting with a very small position. I'm waiting for the ECB to give me the green light to sell more, because I think commodity currencies could do well, continue to do well into the end of the year. And really made yeah, Aussie Kiwi probably remaining bid. So those are like the themes right now, and I guess we'll find dollar rally sellers in most of the pairs now, right?
Yeah, guys, I know you're asking about various pairs and assets and whatnot, but time's ticking on. We can have a fuller look at things when things are a bit calmer tomorrow. Whenever Bran, you're in the bloody chat room, mate. You know what? You can find your cable analysis.
Horatio, I like that thought as well about Aussie Swiss, by the way. And Ali, quickly on your gold. We are in a little bit of a zone here, mate. I'm not going to sell into this, but I know that you've already tried it a couple of times and it worked out relatively well. Yeah, I mean my resistances are more in the 2050s from here, but that's each and everyone has probably different sensibilities on that. But I'm not going to stand in front of the train right now. That's just my view.
No,
that's it.
Wise words, mate. Wise words. Right. Have a great day, everybody. Trade safe over the ECB and BOE and Mexico and all the rest of the crap we got coming today. It's nearly Christmas. We can take our eyes off the screens for a bit. We shall see you all tomorrow and see what those clowns at the central banks have done next. Thank you very much.